Hi, my name is James and welcome back. In the first quarter of 2025, we saw a huge collapse in the US dollar, and many YouTube economists put this down to a collapse in confidence.
Or it's all about confidence. When investors lose faith in a country's economic future, they move their money elsewhere looking for safer bets, or at least to try to diversify away from being overly tied to a certain currency. In this case, it means selling off dollar-based assets in favor of something like the euro. Result is dollars flooding the market, driving their value down. Meanwhile, rising demand for the euro pushes its value up. But why is this happening to the US in 2025?
So the infographic show puts the collapse in the US dollar down to the fact that international investors lost confidence in the US dollar as a safe haven asset, and that's why investors sold off US dollars to diversify into euro assets and gold and Bitcoin get away from US dollar exposure. But I'm here to explain to you why I don't think that's the case and why there's actually going to be a bull market run in the US dollar in 2026 and 2027, in my opinion. So why did the US dollar crash in the first quarter of 2025? Well, it's down to the fact that many US consumers and many US businesses wanted to front load the tariffs, so they bought a lot of things in the first 3 months of the year. And what this did was it created a ton of selling pressure on the foreign exchange market as businesses sell US dollars to buy international goods and import them into the US. What this does is it collapses the current account and leads to a ton of downward pressure on the US dollar. But was there actually a ton of capital flight as the infographic show tries to portray? Well, we can see in Q1 of 2025, there's actually a huge uptick in the amount of inflows into the United States of portfolio investment, direct investment, and other investment in the United States. So there's actually no signs to say that there's a huge downward trend. You can see that there was a small $50 billion reduction from Q4 to Q1, but there's actually no real sign of actual financial flow decay. And what we see in Q2 is actually a reversal, a huge crash in the current account because people already had to start their importing and because the tariffs are starting to kick in. And what we saw in Q2 of 2025 is actually a net uptick in net financial inflows into the United States, which is pretty interesting. It's even more than Q4. There's no sign of diversification of US dollar assets. It's actually an uptick. The biggest changes in 2025 is actually the fact that preloading of tariffs. So corporations bought a ton of products before the tariffs came into effect, but now the tariffs actually starting to take hold and collapse US imports, which is a ton of upward pressure on the US dollar. And at the same time, we're seeing a huge surge in exports in the United States. They're exporting a ton abroad, which is a ton of upward pressure on the US dollar. So what I believe happened in the first quarter of 2025 was that the trade balance blew out, which we see. This caused a ton of pressure or downward pressure on the US dollar. But what we're seeing since then is the tariffs come into effect and improve this trade position, balance of trade, and cause, I believe, in the next couple of years, a rally in the US dollar as the financial inflows will continue, support the US dollar, and the trade balance will improve in the US dollar. And another result is the fact that more US dollars remain stuck inside the United States and less will leave abroad. And this leads to a big problem because the US dollar is used as a medium of exchange instead of international transactions. So there's less US dollars leaving from the United States by importers. Now there's a shortage worldwide. And the problem is that, or a shortage of international liquidity of US dollars. What we can also see is thanks to the Federal Reserve conducting quantitative tightening and removing US dollars from the system, that domestic liquidity or demand for US dollars is increasing as they become more scarce. So to summarize why I believe the US dollar will appreciate in 2026 and 2027, because we saw a ton of downward pressure in the first quarter of 2025, as we see here with the J curve. Basically what's going to happen, I believe, is that this is going to reverse as net exports improves and the US dollar will gradually begin to appreciate. What we're also seeing is a shortage of US dollars worldwide, thanks to Trump's tariffs, less US dollars get out abroad, so international liquidity dries up. And what we're also seeing is domestic liquidity drying up as quantitative tightening takes effect, and basically we're seeing the SOFR rate go above the repo rate. And this narrative about diversification away from US-based assets is just not true. We can see that in 2025 and Q1, Q2, huge demand of international investors for US assets. And actually, overall net investment was up from Q4 2024.